Hey there, fellow trader. Cecil Robles here. And this short video is going to be about discussing the 7 kinds of Forex strategies that you can consider employing in your trading. You know, as a Forex trader, it's really important to realize that market types, also your goals and your objectives are going to change over time. A strategy that's working today in the market type that we're currently in may not work well in another market type. And you also have to realize that you're going to have different goals and objectives 10 years from now than you do today. For instance, if you're younger right now, you're kind of in your prime earning stage, you have a longer time to grow your wealth, you might be a bigger risk taker right now. But as you get older, and for those of you that are older, maybe already entering retirement age or in retirement right now, your main objective might be to protect your wealth right now. And you're going to have a completely different kind of strategy that you employ in your trading. That's why it's really important to have multiple strategies in your bag of trading tricks, so to speak. This really allows you to roll with the punches and meet all of your current and your future objectives. So let's look at the 7 types of trading strategies, and I'm going to briefly break down each one and how you can employ those particular strategies in your trading. So here are the 7 kinds of strategies that we look at when we're looking to meet our objectives. Now, in my experience trading over the last 10 years, I've found that some of these strategies are going to be more effective than others, more consistently. And yet they each have a particular role to play. I personally traded all of these types of strategies, and I'm going to talk about each one briefly, so stay with me here. So first we have trend following, breakout strategies, scalping strategies, mean reversion strategies, grid strategies, fundamental strategies, and arbitrage strategies. So let's talk about trend following strategies first. This is probably my favorite type of a strategy. Now, the basic premise underlying this strategy is that markets don't change very often, right? Once a market begins to trend, it doesn't change very often. It might trend for months or even years at a time. And, once you find that particular trend, you should hold on to, and then you should add on to those positions as much as possible. This is one of my favorite types of strategies for the Forex market, because I always like to tell people, listen, if you're looking to find a trend, all you have to do is look in the Forex market. There's always a trend in the Forex market because currencies are constantly moving against one another, and you can buy and sell just as easily. So with Forex, it doesn't matter if, the dollar's going up or going down, the euro's going up or going down. We can find a trend by pitting weak currencies against strong currencies, or vice versa, strong currencies against weak currencies, so on and so forth, and buy and sell. Now, these strategies are obviously going to work well when there is a trend, and the smoother the trend and the harder the trend, then it's going to create very quick profits for you in short order. Now, they don't work well when there isn't a trend or in a sideways market, obviously. So it's important to be able to determine when you're in a trending market versus when you're in a sideways market. In some other videos in the Your Forex Mentor YouTube library, you'll find me talking about how to determine when you're in a trending market versus when you're in a non-trending market. It's very easy to see, but trend following is, once again, one of the strongest strategies that I think you can use as a currency trader. The other good thing about trend following is that you don't have to risk a lot. You can make a small risk, cut your losses short, and it takes advantage of letting your winners ride, which if you've read Jack Schwager's, the Market Wizards books, then many of the great traders in there will say the same exact thing. Cut your losses short and let your winners ride. That is extremely important to the long-term viability of a strategy, is being able to get out of a market that is going against you quickly and lose very little money, and at the same time be able to stay in a market that is going in your favor and adding on to those positions as much as you possibly can. So the second strategy here is a breakout strategy. Breakout strategies are more geared towards swing trading and catching fast momentum in the market. These strategies are going to do poor in sideways markets because price is often going to reverse before it hits your target. I love breakout strategies. As a matter of fact, breakout strategies are one of my most profitable strategies that I employ because you can use them almost all the time, especially if you're familiar with going up to a higher time frame, finding the trend, and then trading breakouts in the direction of the trend. With swing trading, breakouts can be very, very profitable. Swing trading usually is employed on the 4-hour chart or even the 1-hour chart, and breakout strategies can be very, very profitable for you in those particular scenarios. The key is taking the right breakout so you don't get whipped in and out of the market if it becomes a sideways market. And there is a way to do that. First, the best way is to trade breakouts as much as possible in the direction of the overall trend on the higher time frame chart. So if you're looking to swing trade, look at the daily chart. Find the trend on the daily chart. Trade breakouts only in the direction of that particular trend. Also, trade breakouts as a second trade confirmation when you're already in, say, a continuation type trade, or you're already in a reversal trade that has where the market has reversed and now it's looking to change directions or change trend directions. You can use breakouts very, very easily to add on to your position. So breakouts are very strong strategies that you definitely need to have in your bag of trading tricks for sure. Number 3, scalping strategies. Now, these strategies are going to focus on taking small, short-term profits out of the market. These systems obviously can make big profits very quickly. However, there are some inherent weaknesses with these strategies. For example, if they aren't programmed correctly, then you can get caught in some adverse market moves. Now, generally speaking, these particular types of strategies, a real scalping strategy is going to be a high-frequency trading type strategy where you're taking many trades in the course of a day. Over the course of a month, you might have hundreds and even thousands of trades in these particular types of strategies. So many of them are going to be deployed using an automated trading type system. But scalping strategies can be very profitable. Now, the other downside to scalping strategies here is that generally you're looking to take a very, very small portion of profit out of the market. Sometimes even 1 pip or less than 1 pip or 2 pips or 3 pips. It's very small. Sometimes 5 or 10 pips, but the amount that you're taking out of the market is very small. Obviously, if you don't have a good broker with fast execution and with very, very low commissions, you can find yourself into an upside down situation in a scalping strategy very quickly. So when you're analyzing a scalping strategy, those are really the things to look for. Number 1, you've got to have a great broker. Number 2, you've got to trade that broker with very low commissions. And then number 3, the majority of time in Forex, especially with the Forex brokers out there, the scalping strategies are not going to be able to be traded with a high volume amount. In other words, you're not going to be able to trade millions and millions of dollars with the scalping strategy. Now, I've seen some of these strategies turn a very small amount, 10,000 into 100,000 in a very short period of time. But the problem is that usually you're not going to be able to trade more than 6 to 10 lots on these particular types of strategies. So once again, trading millions of dollars with these strategies is pretty much out of the picture. You want to trade these strategies with $5,000, $10,000, a small amount, build it up very quickly, take your money out, and do it all over again. And now you're playing with the house money. So scalping strategies can be very profitable, but once again, pay attention to those downsides that I talked about and don't get caught up in the wrong particular type of scalping strategy. Mean reversion strategies. Revision strategies are generally very stable systems when combined with some other type of strategy like trend following. I like to use mean reversion with trend following strategies. So They can generally be traded for any time interval. That's the good thing about them also, whether you're day trading, you're swing trading, or you're position trading. Now, what mean reversion basically means is that price comes back to the mean, and then if you're following the trend, it allows you to essentially jump in when price comes back to the mean and follow that trend even more. So that's why mean reversion and trend following strategies work very, very, very well. Now, the next one is grid strategies. Now, grid strategies usually work well in lower volatility markets. You can't really, these strategies are not going to work extremely well in a high volatility market like we're seeing right now in this particular time that we're in. The markets are very unstable. They're very volatile. There's a whole lot. There's literally a geopolitical event going on every single week. There's some kind of global crisis happening just about every single day. So it's a very volatile time and a very volatile market. Grid strategies really work in low volatility markets. Now, one thing that you can do is you can trade a grid strategy with a particular currency pair during a low volatility time for that currency pair. For instance, a low volatility time for the euro dollar and the pound dollar is going to be during the Asian and the Australian trading sessions. So a grid strategy can be employed in a particular currency during a particular window of time where the market is historically going to be very quiet for those currencies. And the reason being is because those particular countries' markets are not open at that particular time. So you're going to have less traders trading those particular markets. Therefore, you're going to have generally lower volatility. So it's important that if you're trading a grid strategy, that you trade it with lower volatility. Now, grid strategies are mathematically based algorithmic strategies that require both monitoring, constant monitoring, and sound money management. And in the right conditions, they can be extremely, extremely profitable. So do some more research on grid strategies, find a good one, and once again, put it in your bag of trading tricks to trade in lower volatility times. Number 6, fundamental strategies. Now, I don't like a simple fundamental strategy by itself. I like technical analysis. I like technical analysis to confirm the fundamental things going on. But essentially, they're based on gathering economic data and information. And usually they require a very skilled analyst and access to high-level information. Now, one of the ways to employ a fundamental type strategy in your trading is to follow analysts who are very good at determining fundamental things that are going on in the market, reading their commentary, reading their analysis, and essentially then taking that and matching it up with markets that you like to trade and that you are able to analyze the charts on and find good trading patterns in. That's what I do. I follow some very high-level bank trading type fundamental analysts, also bank trading levels, also following the big banks and where they're getting into the market at. These are all ways to use a fundamental strategy. But listen, make sure that you back that fundamental analysis up with a strong technical pattern to get into the market as well. That's very, very important. Next is, and lastly, is the arbitrage strategies. Now, these aren't strategies that I use very often. I have used them in the past, but arbitrage strategies usually require multiple brokerage accounts. And what they try to do is take advantage of slight differences between price feeds. So one broker may have a price feed that's higher, another broker may have a price feed that's lower, and essentially you're trying to arbitrage the difference between those price feeds. Now, Forex is really good for this because it is not a central market. So you might have one broker that is 2 or 3 pips off of another, and there's a way to arbitrage that so that you can make money on it. Now, you can also make a lot of money on these particular strategies, but they do require a high-level mathematical algorithm to take advantage of these changes. Now, ideally, you want to have several of these strategy types in your portfolio to get the best results. So you want to have the trend following, the breakout, the scalping, the mean reversion. You want to have the fundamental analysis going on. You want to have the grid strategy and the arbitrage strategies. or a basket of any of those particular strategies that you can trade based on your particular objectives and the type of market that you're trading. Now, if you employ all of that together and you do it soundly, you can be a great success as a Forex trader. So I hope this short video gave you some insight and some information into the different types of trading strategies. Next up, I'm going to show you how to analyze these particular strategies, what you need to be paying attention to so that you can analyze these particular strategies and find out which one is going to work best for you. I'll see you in the next video.